cryptocurrency market is never without volatility. Just 24 hours ago, while the market was beginning to show slight declines, it largely remained positive on a weekly and monthly basis. However, as evident now, the situation has shifted significantly. The market is experiencing widespread declines not only on the daily and hourly charts, but also on the weekly and monthly timeframes. This downturn is the result of an unforeseen black swan event impacting the market. Unexpected events, regardless of the type of technical analysis, TA being conducted, or the market predictions being made, can arise suddenly and lead to significant price fluctuations. However, does this signal the end of the market or the onset of a bear market? I do not believe that to be the case. My perspective is not solely based on technical analysis or a general outlook on the market. Instead, it is informed by our current position in the market cycle and the time of year. As we transition into the second half of the year, now midway through June, these factors provide important context for understanding current market conditions. The events currently unfolding are remarkably similar to those that occurred last May, and this pattern has repeated multiple times. Before addressing this recurring trend, let us first examine the reasons behind the recent market downturn. Bitcoin has dropped to $103,000, 0 cents. XRP has now below $2.10, and Ethereum has declined to nearly $2,500, 0 cents. Turning to the major update, reports indicate that Israel is preparing for a large-scale attack from Iran. This information was released at 8:21 p.m., and less than an hour later, reports emerged of Israel targeting numerous sites across Iran, including military and nuclear facilities. With reflecting on situations like this, it is clear that they are never a positive indication. This is not something to be celebrated or viewed as favorable. On the contrary, it is deeply concerning and negative. As we analyze and discuss these developments, the key point to emphasize is the presence of significant threats, including warnings and heightened concerns about potential global conflict. Speculation about World War III and similar scenarios often dominate headlines, creating a heightened sense of alarm. These narratives tend to be exaggerated, as we frequently see such reactions whenever conflicts arise outside of the United States. Recently, I shared a post addressing the growing concern as stock and cryptocurrency markets reach levels of greed. I noted that global events, coupled with alarming headlines suggesting the potential onset of World War III, often trigger widespread panic. These moments, while unsettling, tend to act as significant shakeouts in the market, creating opportunities for strategic investments before a potential upward surge. I want to emphasize this perspective clearly and succinctly. In a previous video, I discussed how both the stock and cryptocurrency markets were exhibiting signs of greed, suggesting the need for a slight market correction, not a crash, black swan event, or anything overly dramatic to reset conditions. Today, we have seen that correction and more. From a technical perspective, this is beneficial for market price action and the broader outlook. However, I am not supportive of the events driving this shift and want to emphasize that I am not celebrating these developments. It is important to understand that there is no cause for fear at this point. I do not believe this marks the beginning of a major conflict or the onset of a prolonged bear market. That said, these developments warrant close attention, particularly if the situation begins to escalate further. For the most part, this situation is quite similar to what occurred in May 2024, when several major conflicts were taking place. At that time, there were over 5 distinct conflicts, eventually escalating to 8 or 9. During that period, the events began in May, and we observed a notable push followed by a rebound. This resulted in a lower high at the time. However, in the current scenario, we have already achieved a significant all-time high on this chart, indicating that we are not dealing with lower highs. The market experienced a sell-off into July, followed by a rebound during the same month, only to continue declining into September. Currently, many are speculating that this pattern may repeat, anticipating further sell-offs with limited positive price action until later in the year. Historically, September has not yielded significant gains. Instead, it has often been characterized by a brief rebound. Notable upward momentum typically begins by November. However, I do not believe we will have to wait that long on this occasion. I view the current downturn as a key swing low, potentially setting the stage for a significant upward expansion. This situation is reminiscent of 2021, when similar market conditions led to major sell-offs before substantial recoveries. Prior to a significant market movement, there was a notable sell-off, which I would like to highlight for context. Looking back at the daily chart, it becomes evident how substantial this move was during that period. While some may argue that conditions were not as severe as they are now, the December price action provides important insight. During this time, Bitcoin experienced a strong upward momentum, followed by a pullback of approximately 9.85%. This correction occurred before Bitcoin reached new all-time highs, ultimately climbing to $42,000. There have also been significant sell-offs during this period. For instance, in November 2020, the market experienced a decline of approximately 16-17%, followed by another extended pullback in early December, resulting in an 11.79% drop. Currently, based on the daily chart, the price action reflects another notable sell-off. This is not a minor decline, but a substantial 7% decrease. It is important to recognize that we have endured more significant challenges in the past. For context, if we look back to the beginning of the year and examine the movement from the previous highs to the lows, it represented a 32% decline. In comparison, a 7% drop is relatively minor and does not warrant undue concern. However, such fluctuations are likely to cause unease in the market. This situation also draws attention to Bitcoin dominance, which has now reached nearly 65% and is breaking past previous highs. The critical question remains whether it will surpass the prior peak from May 7th and reach 67%. Such an outcome is certainly within the realm of possibility. During this period, while Bitcoin has experienced a 7% decline, alternative cryptocurrencies are facing even steeper losses. For instance, when comparing XRP to Bitcoin on the daily chart, we can observe more pronounced drops relative to Bitcoin, which aligns with current market trends. Additionally, it is worth reflecting on events from October 1st, 2024. Notably, there have been reports indicating the Iron Dome's inability to intercept Iran's missiles. This information, originating from Wall Street Bets, garnered significant attention with 1.4 million views and substantial engagement. These developments underscore the importance of revisiting the events of October 2024 for further analysis. Let's revisit October 1st to analyze the market movement. Leading up to this date, a sell-off had already begun, with the market dropping approximately 9.6%, culminating in a total decline of 11.55%. However, despite the bearish sentiment during this period, the market experienced a reversal and began moving upward. This highlights the importance of focusing on market structure, particularly in the context of Bitcoin. While the recent sell-off and widespread panic are noteworthy, it's essential to recognize the significance of the support level that was tested. The market briefly touched a key support level from early May, which preceded a rally to a new all-time high. The primary focus at this stage is on maintaining the current lows. While it is not imperative to hold these levels, there is a possibility of further decline, which is reflected in the accompanying chart. Ideally, it would be beneficial to sustain the 12.8K level, as a foundation has been established there. Additionally, it is important to note the presence of lower highs in the current structure. To foster a more positive outlook, it would be preferable to maintain higher lows during this period, ultimately leading to the formation of higher highs, which would signify a bullish trend for Bitcoin. I believe the current market situation closely resembles the patterns observed in early October or May of 2024, where we experienced a modest market sell-off followed by a recovery and continued upward momentum. It is important to note that while cryptocurrencies are undergoing significant bearish price action, attention must also be given to the stock market. In particular, I anticipate a sell-off in the S&P 500. The key question is the extent of the decline. How substantial will the pullback be when the market opens? For instance, we might see a drop of approximately 1.4% to 1.6%, or it could be a more pronounced decline, potentially reaching 3.7 to 4%. My primary focus is on the gaps in the market that may be addressed during this movement. What's notable here is that while some may view this as a significant drop, when we analyze it in the context of daily trends, it is relatively minor. In fact, it is a shallow decline compared to typical market fluctuations. This type of movement could represent a major sell-off before a potential breakout to the upside. Furthermore, if the ongoing conflict is resolved within the coming days, the S&P 500, which is currently near record highs, could still target new all-time highs relatively quickly. However, the primary reason I anticipate a sell-off is due to the current state of pre-market activity, which appears to be under pressure. At present, the S&P 500 sits at 59.4, reflecting this challenging environment. Dow futures are currently at 42.6, with the NASDAQ around 21.7. If we observe further declines in stocks, partially influenced by the crypto market front-running due to its 24/7 operation, we may experience additional market volatility. Regarding Bitcoin, the price recently tested the 1.2.7K region, a significant support level previously reached in May. Should this level fail and the market break below the recent lows, the next major area of interest lies within the fair value gap between 97.7K and 100.7K. Although this gap has been tested once, it remains to be seen whether it will be fully filled before the market potentially rebounds. Such a move would not be alarming. However, it is worth noting that altcoins are likely to experience a more substantial impact under these conditions. In the long term, I remain confident that this market has the potential to rise significantly. Regarding altcoins, I still anticipate that we may see increased activity and growth by the end of June. It is important to keep in mind that market conditions can shift rapidly. Just as bearish price action can reverse unexpectedly, bullish momentum can also emerge just as quickly. When considering Bitcoin, it is natural to also examine XRP, which continues to hold its position within the higher low region. If we experience a more pronounced decline in Bitcoin and equities, it is likely that the current higher low on XRP may not hold. In such a scenario, we could see new higher lows forming around approximately $1.91.5, or potentially as low as $1.80 in the event of a significant sell-off from the current trading level of XRP. This would represent a decline of approximately 8.75% to the first level and around 15% to the second level. However, it is still possible to maintain the higher low structure, and I remain open to that outcome. My consideration for potential lower price action is primarily influenced by the performance of the stock markets, so monitoring equity markets during their opening sessions is critical. It is important to monitor Bitcoin's rebound closely. Currently on the lower time frames, such as the hourly, 2-hour, or even 4-hour charts, the primary focus is on establishing a stable floor. Given that the situation is still unfolding and the price action remains relatively new, the outcome remains uncertain. However, I will be closely observing Bitcoin's performance tomorrow, particularly with the market opening, to assess any significant developments. Overall, I am not overly concerned about the situation. While it may cause some short-term challenges, I believe it will ultimately result in significant long-term benefits. It's simply a matter of persevering and navigating through this phase. With that in mind, I hope you found this video valuable. If you did, please consider liking the video, subscribing to the channel, and enabling notifications to stay updated on future content. Thank you for watching.